We have the critical minerals. Do we have the money to turn these projects into operating mines? Maybe yes, maybe no. The maybe is in the details. Details like permitting, infrastructure, long-term demand, and BC's ability to be in the resource development cycle at the right time. Hello, I'm Stuart McNish, and you're listening to Conversations Live. Conversations Live is a long-form public affairs dialogue series addressing the big issues of our time. For each episode, we bring together subject matter experts for a deep conversation designed to provide you with information that helps you make more informed decisions. I hope you enjoy it. If money were no object, we just heard that. How quickly can we move to an operating mine in Canada? Well, money in Canada is an object, and ultimately that's what it comes down to. Who's willing to put up the cash, and under what terms? Earlier this afternoon, Caleb Ben shared a common metaphor about money. He said, capital is a coward. Would you agree, Lisa? It can be?
It can be, yeah.
Yes. He said it's time for capital to be courageous. He may very well be right, because his presentation echoed what Michael Goring of the Mining Association of British Columbia says. We're in a golden moment in critical mineral mining. He says BC and Canada have what the world wants. The question is, do we have a bold investment mindset in Canada that will attract the money needed to build complex, remote, critical mining projects? And if we can make that happen, then, to quote Caleb Ben one more time, maybe we can realize the best of us as a nation. So welcome to the Conversations Live portion of today's conference. We're live casting on the Vancouver Sun, on Conversations Live, and on LinkedIn. Today we come to you from Kem-Kemalé, the land of many maples. These are the traditional territories of the Musqueam, Tsleil-Waututh, and Squamish First Nations who have lived on and continue to call these lands home, OCM. Our topic today is, of course, attracting investment for critical minerals. We have a remarkable panel. They are Divya Shah, the Managing Director of Investments at Canada Infrastructure Bank; Lisa Davis, the CEO at Pear Tree Securities; Ashley Glenn, Director at Export Development Canada; and Martin Tureen, the President and CEO of FPX Nickel. Lisa, I want to start with you. Critical minerals are clearly in focus. However, just how many, or rather how few people or organizations are we talking about that are the real important audience, the ones with the money that are willing to invest in these complex remote projects?
Am I on?
Yeah. Yep.
Okay. That's a good question, and it's not very many. I think most people would be surprised to learn, first of all, if I back up, most of the money for exploration stage projects in Canada comes from flow-through share financing. And of that, probably about 90% is funded by about 3,000 taxpayers in the entire country.
That's it.
That's it. And there's StatsCan data to back this up. It used to be the case until probably a dozen years ago or so that the flow-through share market was really a retail market. I mean, there are lots of things structurally that have changed when it comes to financing early stage mining projects in this country. We don't have the sort of active asset managers that we used to have. The retail market's really been decimated. And when, in 2006, when the donation of publicly listed securities free of capital gains tax came into play, what happened was this new industry of charity flow-through financing was created, and what's driving the investment now for exploration in Canada is really the small number of ultra-high net worth people that are purchasing the shares for donation or tax planning purposes. They're then either donated to charity or sold immediately to a strategic investor or an institution. But the drivers behind that capital are really the tax levers, and it's a very small group of people across the entire country that are funding like almost all the exploration in Canada right now.
So what are they saying is important to them to say, yes, I'm going to put my money there behind these particular projects?
Well, they're looking at the tax incentives that either reduce their tax bill or create a much lower after-tax cost of making a large charitable donation. One of the things, unfortunately, that we're hearing so many good things out of government at different levels about trying to incent investment in the entire critical minerals value chain. That's great, but I sort of feel like the right hand and the left hand are not sort of talking to each other, even in the same level of government. So, NRCan's always been a great supporter of things that are creating the conditions that we need to have investment in early stage exploration. But the people that, like in the Department of Finance, are at the same time making changes to tax legislation that are really impeding the ability for people to take advantage of the incentives that have been put in place. So, I don't want to get too technical about it, but there have been changes to something called alternative minimum tax, which is a parallel tax calculation for high-income earners, which is taking away the deductions and tax credits that the government has put in place to try to encourage investment. So I think the different parts of the government have to get together and talk to each other and make sure that things are happening the way they say they'd like them to be.
Well, Divya, isn't that one of your main points? All levels of government have to be talking together and working in alignment.
Absolutely, and I think what we've seen happen in the last couple of years, at least from the federal government side, there is a lot more coordination. It can always be better. No question. But I think, take the example of Ashley and I, we work very closely with each other. We're bouncing ideas off each other, we're bouncing leads between us. I think this will continue on because of how high the priority is for the government of Canada. And on top of that, it's helpful to have the Major Project Office that has now come in. We look at them as the invisible hand almost in many ways, and yes, they have some projects that are referred to the project list, but that doesn't mean they're not involved across the board, evaluating corridors, looking at certain things. We also have behind the scenes a variety of tables where we get together both with the funding side of the world and the financing side of the world to make sure the taxpayers' dollars of Canada are going further to get maximum projects done. There's also now, as CIB, we do a lot of work even with the provincial and all levels of government. We have been working with the BC Transport team and the BC Minerals Department to develop a paper that looks at infrastructure opportunities from a top-down perspective on what are things that would open up mining regions in the Golden Triangle, both transportation and mining opportunities. And I think this is the collaboration. So it's not just opportunities coming fragmented, but working across levels of government and between federal governments as well. So I'm hugely optimistic on this front.
You're very optimistic. Isn't that's fantastic. Ashley, over to you. You know, the EDC, you played an important role in mine development. What's the appetite for critical minerals like right now as compared to what you've done in silver, gold, and copper to now?
Yeah, and just building on what Lisa and Divya said, so EDC is Canada's export credit agency, and we've been investing in mining projects for 30 years, but actually mostly abroad in copper, gold, iron ore. Now we're applying that to this massive ambition that Canada has to get a ton of mines up and online as soon as, feasible. And we are seeing that collaboration. Like, I totally agree. We're seeing a lack of public equity, even private equity movement in the market, but instead we're seeing not only what Divya said, just this cross-Canadian government collaboration that's often happening in the background. And then in my role, every one of our allies also has their export credit agency. And where we used to just fund these mining projects and show up at the meetings for negotiations and just kind of say hello and goodbye to each other at the end of the day, now we're actually, all of our leaderships are like, how are we all financing these together? Because with the lack of equity options for this sector, given the risk profile and many other reasons, I think it is an all of government, but also all of our allies as well. So we're seeing the other export credit agencies interested in the BC projects and talking to them about that. They're also launching equity funds, in Australia, Germany, the US, Canada has one as well. So, and all of those, because I think between the off-takers, governments, allied governments, equity, I think these projects are massive, I think it takes all of them.
Lisa, I'll come to you in a second one, but Lisa, yes?
Yeah, well, I was just going to respond to say, I appreciate that, everything you said, and I think everyone is trying to work hard together, but at the same time, I don't know if it's just that certain people in government don't have the sort of same understanding of the ecosystem to fund mining as those in, let's say, NRCan, where they're completely focused on that. But as an example, the Liberal Party in 2025, when the election was ongoing, put right in their platform that they were going to expand the group of expenditures which would be eligible to be funded through flow-through shares. And I think NRCan estimates that something like $400 million would have been very quickly made available for financing of certain types of expenditures that are really hard to attract capital for right now. And the Liberal Party's platform booklet actually said that they were going to make clear that things like the expensive technical work and engineering studies and feasibility studies and that sort of thing would have been eligible to be funded this way. And in the November 2025 budget, the government turned around and did exactly the opposite, because there had been a BC Supreme Court case that had actually disagreed with CRA in its interpretation. It was a case that Seabridge brought, and I thank Seabridge for doing that very much, because we need clarification on these things. And so the BC Supreme Court basically said the same thing that was in the Liberals' platform. And then in the budget, the government turned around and did exactly the opposite. So, I mean, that's sort of not in the, I think, the purview of what you're doing from day to day, but on the wider sort of bringing, together the policy and the execution of things that are actually going to make those, policies into real progress on these issues. I'm not seeing that.
So, Martin, you're out there on the front lines actually attracting this money. What are you experiencing, and what's standing in your way?
Yeah, thanks, Stuart. So, just for background, FPX Nickel is developing a large nickel project here in BC. We've just entered the environmental assessment process and are working on a feasibility study to support FID. I would say it's a bifurcated response. You have, on the one hand, strategic investors, meaning mining companies, downstream off-takers, who are very attracted to BC. They speak with their money, and there are many proof points of that, both for our company and for many other companies in BC, as well as majors making major investments in this province over the last decade. But despite all those proof points, there's still a perception within the financial community that BC is perhaps not the most attractive jurisdiction to place capital. And so then the question becomes, how do we as an industry kind of resolve that? And it's down to proof points ultimately around permitting. I think BC's had a lot of success over the last 12 months or so, announcing, various mine expansions, Copper Mountain, Highland Valley, the SK Creek positive decision recently. There's lots of great proof points that are starting to build up. I think what's missing is proof points around the speed and certainty for permitting of greenfields mine projects. And to the extent that BC can start to put some wins on the board in that respect, it's going to start to change that perception. That perception, though, is very difficult to change among financial investors. If you just think about the profile psychologically of people who manage large pools of money, they're intelligent, highly self-regarding people. Once they form an opinion, it's very hard to change their opinion. And so those proof points from a permitting standpoint need to be continued to be laid down in order to change those views.
But when you're out there and you're asking for money right now, and everybody knows that it's risk. It's a common word that we've heard this afternoon, risk, 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 risk. Yet are we doing things in this province and in this country that are helping to mitigate that risk?
Again, I would say it's a little bit bifurcated. It's a little bit glass half full, glass half empty. It's great to see the words that leadership within both at the provincial and the federal level, there's a clear kind of the word being sent out from on high that we need to have more efficient, streamlined permitting processes, that resources need to be allocated to build up capacity within First Nations groups to be able to participate meaningfully in that. But more work needs to be done. There's, words only go so far. Throwing money at the problem only goes so far. Resolving, longstanding issues, particularly in this province, around that relate to rights and title, to overlapping territories. Those represent obvious challenges that need to be dealt with kind of head on.
Right. So, Divya, we are looking at large, complex, and remote being an important word in understanding what these projects are. So yeah, you can have what will be a potential mine site, but you need to have infrastructure in place to be able to move the resource from there to market. What role do governments play in helping to attract investment capital and in their role in working towards the development of that infrastructure? Because if you add that into the cost of the mine development, it starts to push those pro formas out of reach.
I mean, we love this question because it's the eternal chicken and egg question that the market tells us, right? If you build a road, then we'll build a mine. If you build a mine, we'll build a road, and it never happens. From a CIB perspective, we were created to build projects that are otherwise not going ahead. And our job in the sector of critical minerals is, yes, to work with mining developers, but on the other hand, it is to work with the provinces, different layers of government, as well as the indigenous communities on infrastructure that we call shared infrastructure that opens up mining regions. A lot of our mines are in the remote north or remote regions that don't have the infrastructure. If only someone built that infrastructure, can everything else be a catalyzer? So infrastructure is a catalyzer, right? Our job is to take what we call the build it and they will come risk. We're happy to be the equity in these kinds of projects, take the risk where as the mines open up or as industrial zones or things open up, we will get paid. If they don't open up in our maturity time horizon, we have to take the loss. And we will do that in a way that is economical, sustainable, working with indigenous communities, because them owning this kind of infrastructure, which is revenue generating, is also beneficial to them. At this point, a lot of our work is working with the government. So we have an MOU with the government of Manitoba. We have an MOU with the BC government. And we're also doing a business case with the province of Quebec on an industrial zone. So I would almost say step one is to filter out what's the priority of infrastructure projects that are important. Then we work with them on doing business cases to see what's the potential revenue, what's the probability of mines, what's the cost of building the road, the power line, the industrial zones to actually make this plug and play and work. And then the third thing that comes along with that is what's the investment required from a CIB perspective. And this is what we're trying to do across the provinces as well as the north. It takes time because there's a lot of coordination that's needed. In many cases, we're finding that I'm happy to, as you said, throw money at it, but I need a champion on the other side to do the development, to do the EA, to do some of this work. It's not CIB. We can throw money at that as well, but we still need people to, say this is the right road and I'm going to help develop it. Again, a big part of that is maybe major project office plays a role because they are looking at trade corridors. So I think there's a lot of opportunity in building infrastructure and not burdening just one mining company. And so we have to look at and slice things differently is what we're interested in doing.
How important is that relationship to you, Martin?
Oh yeah, it's significant. I mean, for our particular project, we have, I think, very good access to existing infrastructure. There's a little bit more that could be done where I think CIB could play a role in the future. There are other well-known mine projects in Canada that face major, multi-billion-dollar infrastructure gaps where, it is a make or break, and the unlock of these regions is an important theme for sure.
So, Ashley, is the appetite towards juniors greater than it is when we start to look at major mine development at the moment, from your perspective?
You mean the appetite for investment?
Yeah.
Is greater towards juniors, you think?
Is it greater towards juniors, or along the spectrum, are you looking at particular sectors saying we see greater opportunity here, and if so, why?
Yeah, I think we're trying not to be overly prescriptive of, which minerals we're trying to support, which projects at which scale. But to be honest, for the development in Canada, it is the juniors that need the most support. Usually when we're working abroad, it's for the majors, and because it's in a really risky jurisdiction. And I won't go on and on about that. But the bulk of the projects in Canada that we're looking at is junior developers, which is interesting, right? It's this interesting shift in ambition of juniors trying to take it very far along the development phase and to fully capitalize it. And that's a challenge, and they have to build out these huge teams. They have to find EPCMs that seem to be further and further stretched with some of their specialized teams, but we feel that that's where the market is at, and if that's where it's at and that's what's developing critical minerals, then we're happy to work with you and to be a lender into your project. And we come with our own in-house engineers and specialists to do that due diligence alongside of you. Yeah.
Earlier today, I was reading that Barrick Gold has said that they're going to be moving away from what they consider to be even higher risk projects around the world. Does that increase Canada and British Columbia's competitiveness when we see majors like Barrick Gold saying, okay, we want more stability? Lisa?
I think it does. I mean, one of the things, in the, like, as I said before, like most of the early stage, like really high risk capital comes from flow through share financing. And the way these transactions are structured now, there's a flow-through share subscriber who's donating their share to charity, and then there's an immediate exit that's been prearranged to a strategic buyer, an institution. Barrick has been a participant at what we call the back end of these transactions. AngloGold Ashanti just worked with us for the first time. Agnico, Cisco, like these are all companies that are looking at, getting a foothold in some of these really early stage juniors that are very high risk. And we obviously don't have the same kinds of concerns that you're seeing in other parts of the world, like the geopolitical risk. I know people talk a lot about permitting, but no matter what, if you've got a pretty stable jurisdiction, you're still in a situation with these very early stage companies where is a high degree of risk. This sort of system in which we operate in Canada, where there are many junior companies that are like true explorationists, are the ones that do this work well, and having the kind of structure that allows a Barrick or any other one of these producers that would like to see more work happen quickly in Canada is something that I think we can really support.
Mm-hmm. So much of today's session was dedicated to appreciating and understanding the relationship between First Nations and anybody who is entering or in the mining space. I bring it up again, even though it's been covered very well today, because when it comes to attracting money, is where we're at in Canada, because you look at the strength of these relationships, and you could hear these remarkable collaborations that we're working in, and the strength of First Nations as equity partners and so on. Does this actually, as we move further and further into this, give us an advantage and make investment in natural resources in Canada much more certain, and does it help to de-risk projects? I ask that of all of you. Martin, let's start with you, and we'll come down the panel.
Yeah, I think it can, because I think there's a direct link between that collaboration up to and including First Nations equity participation and certainty around regulatory processes. So to the extent that it helps to unlock regulatory processes or make them more streamlined or efficient, I think that's a direct or arguably an indirect benefit. The other piece of this, I guess, would be when it comes to critical minerals, how much do off-takers and consumers care about let's say the ESG credentials, for lack of a better term, of the supply chain for the materials that go into an EV battery, for example. I guess the question would be for people who go and buy a Tesla, how many of them are asking themselves, where did the nickel come from? Where did the cobalt come from? Unfortunately, today, I think that's very few, very, very few. And so it doesn't actually impact, I think, on their consumer decisions in the same way that it might in things like food, for example, where people care a lot about where the food they eat comes from. So there's a bigger sort of consciousness paradigm around supply chains and how we consume things that ultimately could stand to benefit Canadian mine companies and mine operations. But I still think we're several years off from that happening.
Divya.
Yeah, I say it's extremely important to make sure that First Nations are not just consulted, that's the minimum bar. They're involved, they have a financial participation, economic participation, have a seat at the table. And I look at it fairly simply. I mean, the prosperity of this country is dependent on not just the industries doing well, but the people doing well as well. And in First Nations, it's linked together with the prosperity of the mine. So they should get a piece of that. We are seeing a couple of really interesting things. I think the equity conversation is something that should continue on. And the previous panel covered it really well, where it's complicated. I mean, there's a lot of analogy that's being thrown about where Indigenous equity in transmission and utility is the same as Indigenous equity participation in mining, and that's not true. There's a very heavy, deep risk that's involved. That's why we can't attract other players to this place, and it's left to the government to fund it. So I think there's a lot of education that's needed on that end. But the other innovative models that we're seeing is, and again, I think Booker mentioned it in the previous panel, is we have hiving off of certain infrastructure. So the power line, which has a power purchase agreement, can be owned, developed, and kept with the First Nations. And that's brilliant. We see that with the housing side. We can see that with roads. So there's many different ways, again, to slice the pie and grow it to make sure the involvement is not just in name, but also financial and economic. That will help with the processes. It attracts a lot more investors, but there are also many challenges. And I think the education around the risks of the project need to be understood and explained really well, even for us, right?
Ashley, where we're at in Canada, which I think is extraordinary, it truly is helping to de-risk projects because you don't have this legal liability that is unknown.
Yeah, and that's what I wanted to draw on because, in our team, for decades we've invested in projects all over the world. So I know what it's like to wake up and find out the lender's account has been emptied by a military group overnight, or there's been a coup, or you're negotiating in the midst of what could be a massive tax regime change for the country. So we kind of need to put that in perspective because these supply chains are looking for critical minerals. So I think Canada's, and particularly British Columbia, has become this very appealing investment location from a regulatory stability perspective. And because you're so far advanced on, no matter where you are, you need a social license to operate with these types of projects, whether it's Indigenous participation, community participation, knowledge, and you're so far along that curve compared to, everywhere else that we look at projects. And then what Martin was saying on the ESG credentials, we are starting to see that shift. And then not just from where is those pieces of your Tesla battery, but it also just, if you're meeting the World Bank standards for your ESG practices, which basically BC regulation almost does, you're just attracting other buckets of capital that are not able to look at other parts of the world. So I think it does make it kind of the time is now for Canada in this sector.
Lisa.
It's interesting listening to the earlier panelists. There's been a lot more talk than I've heard previously about equity participation by First Nations, and I think from my point of view, having the opportunity to sort of educate people as to sort of how they can get in at early stages and de-risk somewhat just because of the sort of the economic structure of what can be done, whereby equity positions can be acquired at a discount, is something that I'm excited to hear about, because I just wasn't even we weren't having very many conversations with First Nations communities as equity investors, and I'm hearing so much more of that today. So I think there's really something there to look forward to.
So one of the other elements, so that helps to de-risk. We go, okay, we've got a stable, solid basis of Indigenous relations, not just in British Columbia, but across the country. But we also have a regulatory and an environmental process that makes the process of going from ore body confirmation through to actual operating mine long and challenging, and it requires patient capital. Does that actually in the long run benefit Canada, or is it hampering our ability to attract the money that we need? Ashley, I saw you nodding there, so why don't I come to you first and then Divya and
Yeah, well, I mean, it's the sign of the stability, right, when there's that long runway. But I think, and I'm not a permitting expert by any means, but knowing the time bounds of a permitting timeline is definitely helpful for all forms of capital, right? It lets you, you get a better cost of capital estimate, you get a better contingency estimate, which then just lets you size your debt and higher. So whatever that length is, I think knowing the length for certain, almost certainly is very helpful for investors.
Yeah, I would say that it's a fine balance. You need to do the right work and the right amount of consultations, the right thing for the environment, but you also need to get things built. If you don't, I mean, you can't just do one or the other, right? We're a forward-looking nation. We have to do both equally. I think from investors' perspective, if Ashley's right, if you don't have certainty on timelines, mining developers are stuck in the Lassonde curve, or they're stuck trying to get out of that, and there's no line in sight. And there's a lot of investments happening in other sectors that are more attractive. You have AI, you have data centers, you have oil and gas, you have LNG. So we have a lot of competition in the critical mineral space. So we need to make it attractive to both the developers, the First Nations, and investors across the world. And we do that by not taking shortcuts, but by defining boundaries a little bit clearly, I think. But again, I'm not a permitting and environmental expert, but I think finding a good balance and doing it in a way that allows both sides to work is best in the long-term future of Canada.
Well, we're very good at protecting the environment. One of the challenges and streamlining opportunities that have been presented is, well, okay, there has to be a federal government environmental assessment, then there has to be a provincial government environmental assessment, and then a First Nations environmental assessment. Can we not get the three working together, which goes back to your earlier point, Jimmy, about let's get different levels of government working together.
Yeah, I can speak to that a little bit. I mean, BC was the first province to have a agreement in place that allows or provides for substitution, where BC actually substitutes in the environmental office, assessment office here, substitutes in and actually conducts the main part of the EA on behalf of the provincial or the federal government. The federal government still does the pieces for which it has exclusive jurisdiction. So BC's actually been a leader in that regard.
Yeah, that's relatively new too, and a welcome advancement, isn't it?
Yeah, it is, and now we see other provinces in Canada kind of signing up for that. So those are tangible steps that government is taking to do this, but this is not something that can be resolved overnight. And our approach as a project developer really is to we value the certainty of the outcome over the speed of the process. I think as the province and as the country is able to build up more proof points on successful processes where all participants, the proponent, First Nations, and government are satisfied with the outcomes and satisfied with how the process went, then that will unlock more of that patient capital. But unfortunately, it's not something that can be done overnight.
You just mentioned something very interesting. We prefer certainty over speed. How important is that, Lisa?
Yeah, I was going to jump in there anyway. I mean, I think we can have, at least on the side of fiscal incentives, we can have some certainty really quickly. There's some very easy fixes that the government can make. I'm going to give a little bit of a plug here, because if you go to Pear Tree Canada's website, there's actually a petition that you can link to that asks for 2 simple fixes that the government can make. And in fact, there are things that the government already had either, as I mentioned before, proposed in the Liberal platform, or in one other instance, right before the last government was prorogued, there were some amendments to these alternative minimum tax rules that would have gone a far way in creating clarity around some of these issues, and the Parliament fell and they were never reintroduced. So I think when it comes to fiscal incentives that are so important, and Canada, I hear from people like all over the world when I'm like at PDAC or something like that about how incredible this flow-through share mechanism is, and it's been like the bedrock of Canada's financing ecosystem for exploration. And there are some really fast, easy fixes that will bring certainty, at least on the fiscal incentive side.
So one other element to wrap up here is that we take a look at all of this. We have to be in line with commodity cycles. And how much of a role does that play in our ability to be in motion to develop mines to hit the commodity cycle, hopefully, when it is going to produce the financial returns. Because there are mines that have been approved in British Columbia that don't open because they missed that window of opportunity. Martin.
Well, again, I think this is where the federal government is taking steps, initial steps around this sort of G7 buyers club, price floors around certain projects or the commodities they produce. But I think it's key to see that continue to be expanded. Canada fundamentally, structurally has a higher cost regime for mining operations than other countries that don't adhere to the same standards. And so if we want to preserve this industry and see it expand and grow, those types of market supports, unfortunately, do need to be there and in place to at least see projects through that initial payback period. And then the advantage of many Canadian mine projects in this country is they tend to have very long mine lives, very well endowed geologically. And so if they can come into existence at a period where they see that price support, in a lot of cases you're looking at multiple decades, if not generations of profitability. They might just need that nudge at the outset.
Ashley?
Yeah, I completely agree. I think everything now is being set up to be agnostic to that volatility. Like, we've all lived through the volatility, and we, save for copper and gold right now, we're, nickel, palladium, lithium, all of these government support mechanisms and, export credit agency support, it's all being set up in a way that is meant to live through that longevity. And we've even seen on projects where some of the European banks are lending in ways to be flexible to get through, say, a lithium project's price volatility. So I think, the market knows the volatility, and financiers aren't coming naive to think that where prices are now is where they're going to stay. Instead, we're seeing deals being structured, anticipating that full cycle through the life of it.
So, Divya, to play off of your optimism earlier, and sort of a closing thought from all of you, what one or two little changes would you like to see that are achievable within the next 12 months that would continue to build on that spirit of optimism? Lisa, I'll start with you, and we'll just work down the panel to Martin.
Yeah, well, I think I would just repeat, and anybody from government here could go look at the petition if they haven't seen it yet. But there are two simple fixes to, first of all, expand and clarify the category of expenses that can be funded with flow-through shares in that sort of later exploration period, and make a few technical fixes to the rules around alternative minimum tax and the estimates, not just by us, but by our own government, by NRCan, are that hundreds of millions of dollars of equity capital for early stage companies would be freed up immediately.
Which would be vitally important. Ashley?
Yeah, I think from EDC's perspective, we have capital to deploy, and we're very, very excited to do it. So come talk to us early. We're very happy to follow your project even for years. It's what we're here for. It's what we've been doing for decades. And, maybe it's not the right time to lend in the next month or two, but we'll be there when the time is right, along with all of the other pieces that are coming together.
Divya?
Yeah, I think from CIB it's very similar. I think my message to the team and everyone here is try not to think about mining in the traditional conventional sense. You've got a lot of tools now in the federal government from a financing perspective, and who are willing to look at projects and financing structures in a creative, flexible, innovative way. So let's take advantage of that and work with us to get more things built. That's our role collectively, but if we're so with blinders on that this is the way it used to happen, that may not work. So I think just we're being creative, we're encouraging everyone here to be creative as well.
Martin.
Yeah, I'd like to see more focus actually on the expansion of the Major Projects Office. It's basically designed to kind of help to unlock projects and help projects to overcome challenges, whether they be on the permitting side, whether they be in respect of putting together funding packages. And frankly, I think there's sometimes been some negative stigma about the MPO. It was rolled out as being kind of this fast-tracking mechanism, and I think a lot of First Nations communities responded negatively to that. I think it can be a lot more than that, and I think if it can be sort of tactically kind of assigned to look at a variety of projects and really roll up the sleeves and kind of help proponents to resolve challenges, whether they be funding or other challenges. It doesn't mean that all projects will go through a fast track, or it doesn't mean necessarily that all projects will hit the finish line and become mines. But it would be a mechanism by which government could really truly learn and understand what proponents face in going through mine project development, and ultimately lead to a better regulatory and all of government approach to encouraging this industry.
Well, I'd like to wrap up by quoting Caleb Ben one more time. We get this right, and this really could signal what could be the best of us as a nation. Thank you for your time today. Thank you for all of you who joined us online and in person. Thank you for tuning into Conversations Live, an Oh Boy Productions program. If you enjoyed this conversation, you can find our previous and upcoming episodes at conversationslive.ca. You can also follow us on YouTube, LinkedIn, Instagram, and Facebook. Again, thank you. I'm Stuart McNish.